There's a common mistake that most traders surprisingly make over and over. In this video, we'll reveal what it is while teaching you how to catch big stock moves with 3 real-world examples that are setting up right now. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn so you can grow your trading account.
Happy Monday, traders. I hope you all had a beautiful weekend, and I hope you all had a fantastic and meaningful Thanksgiving spent with your friends and family. Now, first of all, before I get into this, shout out to those that asked some really good questions in the comment section of last week's video. I'm going to select one to answer at the end of this video. And going forward, I urge you all to continue to ask questions. It's a great value add to the community, and some really good questions were asked in last week's video. So keep it up, guys, and thank you for contributing. Now, before I get started, lastly, I wanted to first let you guys know that I want to give a recap of last week's action and share a lesson which I think is going to be very beneficial. And then stick around for the end of the video, and I'm going to be sharing 3 fresh new ideas for the upcoming week, and ideas that I'm actually pretty excited about. So first of all, we know that last week was a shortened week. It was a broken up week, and there's a lesson in that, and that is that the mindset adjustment that I laid out in last week's watch list, that was spot on, but more importantly, it's important to remember that the adjustment that was made, specifically as it relates to risk management, time frame, trade plans, those are very important to remember and take into consideration, especially because there will be several shortened weeks next month. And during shortened weeks, like I briefly just touched on, factors like hold time, trade plans, volume, liquidity, and risk management, they all need to be considered and adjusted accordingly. Before introducing the fresh ideas, I want to discuss last week's action briefly, and then we'll introduce some fresh ideas. CYTO is one of the ideas, SGD was another idea, both worked out really well. But the idea in CYTO, perhaps in hindsight, can look quite seamless and easy, but in reality, it wasn't. It posed a challenge, and that is where there's a really good lesson to be learned, from direct experience. Now, in my plan with CYTO, I mentioned that I was looking to short a push back into a critical zone of resistance, one that was laid out last week, and that was around 45 cents. That was from the previous week's failure level. And on Monday, we got just that. We got that push right into this level. The stock pushed near the high from the previous week. It failed, and it traded back to the low end of the range, which was the target. And then I was ideally looking for follow-through down into the mid-20s, but we never got that. It achieved the first target. But after the first failed test in the morning, which is this one, 2 hours later, the stock made a new high before failing again and trading back to the low end of the range. So after shorting the initial failed move in the morning because the stock had a push into Friday's key level and resistance, I shorted this level and I covered some of my position into the first flush, taking some risk off of the table, something that I genuinely like to do. And then I was holding the rest of my position for a move into the low end of the range. But the stock obviously made a new high 2 hours later, and this is where the lesson comes in. So I closed my position above the morning high. That was the plan laid out in last week's watch list, and I like to stick to my plan, and I have stops for a reason. So after making a new high, obviously the stock immediately failed, and I actually re-entered short very quickly, right at around 45, 44 cents. I started hitting to get in short. And I re-entered the position immediately with a stop just above the high, so risking around 3 cents. So what is the lesson within that? The lesson is, to put simply, it's okay to stop out because you can always get back in. You have a plan for a reason, so stick to it. Always respect your trade plan and your stop loss. I have a stop loss for a reason, and as a result, I stick to it. Sometimes it takes more than one attempt for an idea to work. All right, you have to factor that into risk. And especially if it's crowded like this stock was. So I think that, the stock needed to push over the high, it needed to squeeze out some shorts, it needed to trap some longs before the idea could work fairly seamlessly. And it's okay, and this is even a note for myself, it's okay to stop out because you can always get back in, all right? So that is the lesson. Now, let's go over the reason I'm sure many of you are here. Let's go over some fresh ideas for the week. So the first idea is in SHOT. So this was obviously and undoubtedly, this was the top opportunity last week for small cap active traders on both sides, long and short. But obviously now that we've had amazing follow through to the downside, it's clearly on the backside. So with that being said, I'm really focusing on shorting into previous key levels. And now that the stock has come off quite drastically and dramatically, with a lot of news and developments coming out last week, short report, company response, company PRs, etc. But I won't share my opinion on any of that. Really, that it's come off so much, the most I can hope for is either a liquidity event or a dead cat bounce, anything like that to get this to push back into the 455. So very similar to like SGD from last week where the stock failed. I'm looking for a bounce and a secondary opportunity to get short. What my specific plan is for SHOT is I'm looking for a push over resistance that's developed over the last couple of days around $4. I'm looking for a push over that and a brief squeeze out, ideally into 450 or into 5 or within this range. So from a risk reward standpoint, a move like that would get me excited. With that being said, similar to last week and similar ideas that I've shared with you guys before, I'm going to be very patient in waiting for the move to occur. I don't want to see this start bouncing on Monday, Tuesday, Wednesday, whichever day it is, and start shorting 405, 410, and the move only tops out and gives me confirmation at 475, and I'm in a position of weakness because I was too eager and I had FOMO. I'll wait, and if I miss the move, that's okay. If it ends up going to 405 and topping out, either I'll readjust my plan or I'll miss the move, and that's fine. But I'm going to wait for some early shorts to get squeezed out, some eager shorts to get squeezed out, and then I'll look to enter the short once I have a level intraday to trade against, because that means that I have a level to risk against. All right. The confirmation in that sense can be a break of the trend line or perhaps a very hard failed up move into 450.05 and immediately slams to 425, pushes back up, makes a lower high, 430, 440, and then cracks again, holds below VWAP, anything of the such. If that move materializes and plays out, I'm targeting a move back to the low of day. I'm targeting a move roughly to 3.5 intraday, and something like this, some headline risk, company PRs. I don't plan on holding this overnight. Now, the other ideas, more large cap focused, are AFRM Affirm and LMND Lemonade. So I included both of these together in the written format because they have quite similar setups, and both have a high short interest. So firstly, let's go over LMND. Now, this does have an unusually high short interest. I believe it's around 31.5% right now, and a pretty small float, just 49 million shares. Now, LMND, very simply put, it's a straightforward idea. I just like how the chart has coiled and consolidated with a contracting range, and at the same time, I like how volume has started to significantly decline consistently as well. It's almost like a rubber band effect, all right? And so the plan here is straightforward. I'm looking for an uptick in volume. I want to see a breakout in volume for volume to take out the previous day or previous 2 days. And I'm looking for the stock to begin basing above the previous day's high and around 18 as well. All right. So if the stock can consolidate and if it can hold near that area and level of 18 on increased volume, a nice uptick in volume, then I'm going to be on high alert for an entry. So I plan on getting long near 18 once that confirms, with volume and price action serving as confirmation. I'm planning on risking about half an ATR with a stop near around 1750 once I have confirmation and I've entered long. The reason why I will have a stop half an ATR and around 1750 specifically is because I don't want to see the stock re-enter the range. All right, once that breakout confirmation is there in price action and in volume, I do not want to see, after I've entered long around 18, the stock break back below 1750 and re-enter this range. So fairly straightforward. That stop is placed simply because that is where I believe the idea would be wrong. All right. And my target is going to be a potential area of resistance and supply, which should be 20. All right. And I plan on holding this for multiple days, but I definitely won't hold it over 3 days. All right. And then AFRM is a very similar idea. Again, I really like the chart setup here. It has a high short interest near 20%, but a larger float, 224 million float, I believe. And a breakout in A firm would be confirmed if the stock also experienced an uptick in volume because it's had consistent and consecutive days of declining volume while the range contracts. So if the stock can do both of breaking out on volume and hold above Friday's high with authority, then I have confirmation on my idea, and I'll likely get long between 27 and Friday's high, roughly. So between 27 right here and Friday's high. So within this zone, I'll be looking to get long if we can hold with authority and an increase in volume. And with something like this, I actually have 3 targets in mind in A firm, and I plan on taking 1/3 off into each target. First target would be 28. Second target is 29, and lastly, the third target would be 30. And I'm planning on trailing my stop once the move confirms, once it starts to really play out and I achieve my first target of 28. I'm planning on trailing my stop by simply looking at the hourly time frame and placing it below the previous higher low. And so those are the 3 fresh ideas. More ideas tend to pop up, of course, for intraday trades, more active trades throughout the week, and even swing trades midweek. Pop up new ideas and fresh ideas that I'll often look to take. But coming into the week, these are 3 ideas that I really like. And until kind of coil chart patterns and breakouts stop working, these are going to be a lot of the setups that I continue to search for until something changes in this market. Could be this week, could be next week, but my job is to simply prepare, continue to do what's working, plan the trade, and trade the plan. We did get a question, we got a few questions, but one I want to focus on is the question relating to SGD and my plan from last week. And someone wanted to know where my stop would have been. So I did lay this out in the plan from last week, but I don't want to just kind of mull over it because some of you might not be familiar with the thought process. So when I mentioned that I'm waiting for a stock to break, to essentially have a failed push higher and then get confirmation, and I'm looking to put my stop at the high of day. Basically, what I mean by that and how I laid it out on last week's watch list, because someone was unclear of where to place your stop, is after this is broken down and it's firmly on the backside, as I mentioned, I was looking for a push back into some key levels around 550 to 6. And then once that move was exhausted and failed, I was looking to get short against the high of day. So what does that actually look like? Well, obviously, right off the open, we got a very, 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 very exhaustive up move from 260s, just over 5s. We had a quick push over 5, failed, came back into the volume weighted average price, which is a little bit different on the day, but roughly around 4s, 420s. But we had a very sharp up move, a failure. It's on the backside. So I firmly believe at this point that that's the high of the day. We've broken a very, short-lived but extreme uptrend. And so at this point, I'm looking to short pops. So I did get short on all of these pops. Well, not all of them, but I got short on most of these pops, shorting pops, covering dips, holding a call, looking for a breakdown. But long of the short story is once I got that push, the plan confirmed. I was looking for a push into the 5s to 6s. And then that move was exhausted also by volume. I was shorting against the high of day, which was around 514. So my stop was placed just above 514, and I was continuing to short pops, cover dips, and I was looking for a move back towards the low of day. As I said in my watch list, if it started to, on low volume, grind a little bit higher, I wasn't going to take any chances on this given the size of the float and volume. And so I didn't hold this overnight. I got flat into the consolidation near the end of the day. But essentially, this is my thought process in placing a stop where I did. What's also important is within this area as well, notice the volume, how the volume also tops out and then starts to die down. And that tells me that shorts have been exhausted. Eager shorts, similar to what I'm looking for in SHOT this week, have been blown out and exhausted. We've broken a trend line and it's safe to short pops versus the high of day. And what I like to do is cover a little bit. This is more of an active trade. Cover a little bit into support below VWAP as we basing here. Wait until that breaks just to work my price. and also to lock in some profit, take risk off the table along the way until we get a bigger move. And that's essentially the thought process behind that. I hope that makes sense. But great question. Keep the questions coming. And I look forward to next week's watch list, guys. Have a great week trading. Good luck. Be patient. Wait for your plans to confirm. And I will see you all same time, same place next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.